Hey best people, how are you? Quick update from yours truly, the market sniper, the crypto sniper, and the reset sniper. Yes, we're going to talk a little bit on the crypto side. So a couple of you would have had a rude awakening around about Monday, 2 o'clock, starting my kind of UTC plus 2 time, 4 o'clock on the morning. Would have noticed that Bitcoin got a reasonable slam for about 5%. In actual fact, it's at 5%, and that all of crypto responded in kind. Not all to the same degree. We'll come back to that, and this will touch on Bitcoin dominance. But why? And all the processing of how this happens and what went on. So a couple of key things to remember here. I was hoping that I'd actually get you through the sunroof, a bit of Table Mountain in the background, in the scenic route, but I'm not sure that's going to happen. Why did it happen? Well, generally when markets go up for an extended period, as this one has done, eventually you get a point where a respite is required. A respite is required. What does that mean? Well, you've got to remember, when we started to get concerned for Bitcoin's progress on the inverted head and shoulder, so the head being right down at minus 15.5, that low was called, funnily enough, from the bear market 69k head and shoulder all the way to the bottom at 16,000 target. So we had an inverted head and shoulder that was messing around, and at one point it was looking like it's going a bit off piste, and it had us worried. It was at around 24,000 at that time, and it had come back 24.8, 24.9, so it had come back to our neckline for that inverted head and shoulder. And we were saying, well, it's running out of time, because we, with our pattern analysis, have a time period by which our structural patterns should be performing by, and it was well behind schedule, hence the concern. We were forward guessing that it might fail, wrongly, because what did Bitcoin do from 24,900? It then went very strongly up, as it can be wanton to do during real bull phases, and it went from 24.9s, 24.8s, 9s, after coming back twice to that 25k key level of significance, and it went largely straight through to the better part of 44k. Now, what resulted in that? Why did it do that? How did it happen? Well, the ETF narrative came to fruition and suddenly got a big response. I don't know why it hadn't before, but yeah, certain things that made progress, etc., for Bitcoin. Awesome, great, happy days. And as a result, you got a bit of a move as a result of that. And we moved strongly from 24 to 44. That is about nigh on. It's not exactly, it was 24, upper 24s, kind of 9s at its lowest point, and its highest point it didn't hold forever. It was, only just about 44 for a short bit. But that's $20,000 on top of a 24.9-ish start. So it's a pretty exceptional move, largely when you looked at it on a weekly time frame without a single significant candle of redness. So there was one mild green body that had quite a dip wick and then shook it off and came back. So you didn't actually have, on the weekly time frame, from the 24.9s, a single red candle, and you've shot up. Now, in the previous videos that we'd done, we had provided the key levels of significance as 25k, which you had kissed one too many times for our liking. Then we said target 40,648. It varied by exchange, but basically the average was around 40.5. So just without trying to be pseudo accurate on something that is generally indicative rather than an exact science, 40.5 was your key level. And then we gave you two other levels, 42.5, which was the 69, my apologies, the 69k head and shoulders neckline. Now, as I've just described, that was a seminal bear head and shoulder draw, and as I keep saying, no one else drew that head and shoulders, because they don't have complex head and shoulder theory, but that was the one that gave you the 16k downside target. So it went all the way down because you had a 69, almost a 70. So let's just round the numbers. You had a 70 down to 42.5. That's almost 30K. It's 27.5. So you're taking 27.5 or 42.5. So it's like taking 25 or 40, got you down to the 15, 16 level, which is what we got as a target. That was such an important bear draw, head and shoulder. And it was a performing pattern, and you reached the neckline of that when you run. Now, if you look at our charts, that 42.5 in a teal blue thick line, fat cokey draw, for want of a better phrase, is there, and very few people have it. And literally the last up move resisted at it, pull back, it pumped through it for its 43s, 8s, 43s, 9s, touched 44K, it dumped through it, rallied back up to that 42.5, and then skidded a further leg down. So that 42.5 was a seminal key level of significance. Now, the interesting thing is, when we called for the inverted head and shoulders target of 40.5 to be run, we suggested that the momentum in doing so, because usually when you're finishing a run to a target, you're quite strong momentum. So you tend to get a degree of overshoot. We suggested that you would get an overshoot through the 40.5 that would have sufficient momentum to take you to the 42.5. However, the next key level of significance was 47.5. And 47.5 was an additional 5K through the 42.5 and a full $7,000 beyond the inverted head and shoulders. Remember the bottom of the head that was given to you by the previous upside head and shoulders. The inverted head and shoulders low at 15.5 and the 25K neckline, worth our form of projection to the upside, had given you 40.5. So that target had performed. A major reversal pattern in Bitcoin had performed, and it had given you the typical degree of push through the level in momentum that also gave you the 42.5. Getting to the next level of significance, the key level of significance, the 47.5. So let's just explain again, why was that one significant? That was the 64K's head and shoulders. So you had two head and shoulders. The 64K head and shoulder also had a left and a right shoulder and had a higher neckline at 47.5, and that's what gave you the 29,000 fall, the first pullback that was quite substantial in Bitcoin. That rocked many people, only for it to falling wedge and bounce up and run a marginally higher high to 69. So that next level couldn't be assumed on the same basis, with the same degree of probability. Obviously, it's not as likely to have sufficient overrun to do both necklines, and you'll probably require some element or degree of winding up technically to get to the point where you would be able to make the 47.5. And also, it's absolutely standard when you get a key target run like the 40.5, which was the reversal from the lows. It's a key fulcrum. It's the birthing point of a new bull market off the bare lows. It is an absolutely seminal pattern, guys. Anybody who knows this, you know, things that capture the turning point. The inverted head and shoulder captured the turning point, was confirmed, it broke, and it performed after admittedly having a bit of a hectic pullback period. And more importantly, for those that understand HVF method in our community, we actually have time frames. Amazingly, despite running well behind time frame, it had until I think mid-December to do it. It had ended up doing it a week in advance, despite being miles off looking like it was going to do it. That's when we started quibbling and whittling and losing confidence, because the progress was so bad. And then it just turned and pumped. And that was ETF, that was everything. And then it didn't stop. It went all the way. So it did all it was supposed to do, but it kind of was like a 1,500 meter middle distance runner that just decided to stay at the back the whole way, but stay in contact and looked like it was never going to have a chance of winning. And then the last two laps, when it was almost half a lap behind everybody else, just started sprinting and burnt everybody. and came and kicked and nipped it just at the line from the guy who was leading the race the whole way through, and literally wound back that full half lap that he was behind. That's what Bitcoin did. And you know, we wavered on that when it started to get so behind schedule, and we confessed to that, and we say we were wrong. We started to lose confidence, and we didn't wait till the time was up. We said, what's the odds of it? It needs to literally almost straight line in the next week or so, and in the end it ended up doing exactly that. So that is the buggery of crypto markets. You're always in a probability basis, and if you're falling behind schedule, the probability of the performance starts to drop. But markets can always then shock you, and crypto markets can move vastly quickly in a very short time once the criteria was right. Don't forget, we also had a dollar weakness period whilst Bitcoin kept coming back to the dollar strength period. Apologies, let me restate. We had a dollar strength period while Bitcoin kept coming back to the 25k. So it was being a bit leaned on, and then dollar went soft. So then it went from being leaned on to having a tailwind and the ETF story, and so it caught up. Anyway, that brought us to why the 40.5 seminally and the overrun to 42.5. And after doing these key lifting efforts, it's kind of like a power lifter who's close to doing his personal best. After he's done close to his personal best and then knocked his personal best over lifting the weights, he's done. He needs to rest. Don't go, awesome, let's put 20% on your personal best. And you can go, after having done those two huge lifts that knackered you completely, go and knock out a new world record. What would effectively be in the same day. It's like, sorry guys, I built up to that, I'm done. So what happens is loss of vitality, exhaustion, a degree of pullback. After big targets are made on the seminal birthing of the bull, inverted head and shoulder, you then get a key event of progress decay stage. And what does that mean? There's some profit taking. That's what it means. We had a marginally higher high on Bitcoin on the lower time frames, started grinding, going very low vol. I didn't play a blind on this. I took some. I cut 50% my leverage positions. I ended up over the weekend on Saturday. I had ETH, I had Bitcoin, I had a lot of them. I said, I've done really great week. I'm going to cut this. This is looking like it could pull back, but I didn't commit to the whole thing. What happens? You lock in profit, you've done great, you're giving back some of it on the smaller size that was left pulled back. And that's okay. You're never perfectly executing. The key thing is you're getting the idea and you're getting the suggestion that key levels have been run and you should not be getting too greedy. And what tends to happen, and one of the greatest weaknesses still in me as a trader, and I would imagine many of us, is that we get bull drunk. You think, who says it can't just pump to the 47.5? Maybe that's on. I don't want to be outside of the game when this thing's rocketing. And also, if it does that, what's my Ethereum going to do? What's my other alts that we're in? We had an H-bar trade on. We had other things that we were going. XRP was going up. They were all going up. What those other things going to do? How much money am I going to be leaving on the table if I get out? The logical point says the 42.5 was aggressive because it was beyond target, but it was within reason because of blow-off finishes, high momentum finishes. It's not within reason to assume, hey, all of that happens and we chuck it up a further 5k, in other words 7k beyond the target. That's far less likely. You've now just added, and you're getting too over aggressive without a meaningful reaction. Don't forget, I think it was 7, maybe 8 weeks in a row non-stop green. That's what it literally took for it to make its target in time, after playing hanky-panky with us, and of course having the dollar fight it a bit, and then the dollar supported a bit. That's where we're at. You should not be in a state of fear. What tends to happen is people go from superiority complex with winning trades and absolutism, and it's definitely doing this and all of that. You can hear it in the language, to paranoia. an inferiority complex, and oh my god, this is all terrible, and this is now, that's it, and now it's Bitcoin 3 grand or 10 grand or 12 grand, and all of the bare extremities come out. I think this is a reasonably healthy, typical technical reaction in a bull run. On balance of probabilities, that's my assessment, rationally, sitting here. As ever, it's still only a probability take from somebody who plays a probability game, and will probably be both right and wrong in equal measure. The question is, when do you get the asymmetry that if you're right, you get a disproportionate gain versus a small or a locked in 1 unit or 1 R of loss? And that's where we get interested, and that's where we trade. You don't get to guess 100%. You don't get to perfectly execute even when you guess. So if you look at the previous videos, as I highlighted those multiple key levels of significance, I said as much in the video. The likelihood is high that you'll get your 42.5. It cannot be said the same for the 47.5. It's quite a step further on the target of that inverted head and shoulders. So healthy, yes. By the way, also another key attribute that must be discussed is that gold had pulled back, got its real slap in the face. Remember, gold was permissioned the crypto bull run in the first instance, and then subsequently got a real slap in the face. But however, Bitcoin diverged, and the alts and the cryptos, the digital money, got a chance to run for further and longer. But gold didn't get smacked all the way. It kind of was hanging 2020, 2025, but it got slapped back from 2150 quite strongly, in fact. And as a result of that, gold then had a next level pullback, and we said gold will fall below 2000. It was such a strong rejection. It's going to require, it'll have some knock through shock, PTSD if you like, given the severity of the facial slap that it received, that there'll be some follow through to the downside. And it did this weak grinding kind of bull flaggish channel at the 2010s through to the 2025s, where it was trying to hang on and hold a level. And overall, we could see that dip coming, and we felt 1940, 1960 is key structural support. It's going to head in that direction. Whether it goes that far, we'll see, but we don't see too much more. And what's happened is gold has started to get a little bit of a bid again, and it's slowed down a little bit on its run, but it had continued to fall in this anti-fiat market as a God market. So what you were having is quite an extended period of relative dichotomy in performance for Bitcoin versus, and crypto versus the precious metals. And as a result of that, it doesn't last forever. It doesn't always last forever. The digital can perform differently, and I'm not going to say that every time gold goes up, crypto should be going up, and every time gold goes down, crypto should be going down. But there would have to be specific reasons when you get really strong divergence. So there is some degree of correlation. A, because of dollar weakness, they're both measured in dollar terms. B, because they both represent other money, alternative options on money versus currency potentially. And that such a slap down on gold would not have a knock-on effect. Don't forget, couple of reasons this weekend that I was thinking about when I took off 50%, which was kind of my halfway house. I was mentioning to you, the hardest thing is to sell into a market going up. And even I fail on this often. I found it really hard to take that 50% off. And obviously, in retrospect, I wish I'd taken all the very lightly leveraged trades that I put on off in entirety, because you would have full pot to be reloading. And I think it's actually quite a good point to reload to the high side, lower down right now, because I do think it will potentially start basing soon. Little bit dependent on gold, not entirely, but a little bit dependent on gold. Gold stopped going hard down. It had a real spill and a second stage spill around about the same time that Bitcoin Monday morning, because that's the Sunday open, remember, in Asia. So early in your Monday morning, if you're somewhere around the UTC +1, +2 GMT timeline. That's what you're going to get. If you're in the States, it was, maybe even your Sunday supper time. But that is quite typical. So the hardest thing to do is actually to sell in a market that's gone up where you got profit, because you're always thinking, but more. The greed genie in the eyes, dollar signs, hold on, maybe it will not work. Every little minor pattern on the short lower time frames ended up melting up, even when it looked a bit bearish. All the excuses start coming out for holding on. And it's hard to take off if you're using the leverage. But if you sell right and the market does exactly what it does, you're in such a strong position, because essentially you've locked in profit up top there, and you've got full collateral to load up again, only you're starting again, and you're going to earn that same territory on the upside potentially a second time, having locked in what you already earned from, let's say, 40K to 44K or 39s or whatever, and you get to load up at 39s, 40s, low 40s to do that whole game again. Now, I'm not saying rush in, get leverage long right now, but I could see some degree of recovery coming through. I like that it pushed a slightly lower low, marginally lower low after the spill spike, Bitcoin on most of them. And as a result, that is also positive for basing out. It's more conducive to rounded bottoms and concavity and basing out. The worst thing is if you hold a level with a grind line like this, you set up another level, another stab down of selling. So far, and it's early to say, so don't overhold me to this. This is with limited information. It's the charting is hardest to read after a highly volatile event. You have to give it time and let it paint in the sand again, because this is just a boom, an explosion. Where's the dust settling? You need the dust to settle, and then you can read, okay, everything's not moving and shifting around so much. You need a calming, a post event calming is required. So you get more accurate when you've got, okay, this is how we're hanging. A lot of volume by price, not volume histograms. It can often be quite light after a big event, but you get accumulation at a certain price levels that point to certain areas of support and or resistance, etc. And you get a bit of a line in the sand in terms of how it's drawing, what kind of patterns is it now setting up on lower time frames and slightly bigger ones as it starts to rebuild. So that's kind of where we are. And I always felt if you held a gun to my head when we were heading up to the 40K and we suddenly found our mojo again on the seminal basing pattern down with a 15.5K head and the two right shoulders and the neckline at 25. I always felt if we get the target, we're quite likely to get the 42.5. I didn't feel that it would be a very dominant market that ran you all the way in one go to the 47.5, and a winding up process somewhere between the 40.5, which could even see you dip below that as part and parcel of your pullback. Doesn't have to, depends, how violent a pullback it is, but it may just be already close to done. It may not, but that you would have some degree of winding up and consolidation and getting set again before you make the 47.5. So there's going to be a pause, pullback, progress, decay, which means time is elapsing and you're not getting any more upside. You're only getting level or worse during that period. That's not a good time to be on leverage long, because you're paying each moment. They're charging you every hour. They're compounding it to get more fees if you're on an exchange. You're not going up, so you're not making P&L. You're giving back P&L, and you're spending time. That's progress decay. It's kind of like option decay, when the time is getting less on your puts and your calls, but the market isn't moving in your favor. Your asset is actually dropping in value. It's not your option is dropping in value during that period. So overall, that is where I think we are now, and we're going to go into a winding up period. Also, I want to say that Bitcoin dominance also came down, and that in actual fact, if you look at total 3, that's with the number 3, excluding Bitcoin and Ethereum, what you've actually got is a better bounce back on the majors. So you've seen tokens like AVAX have been super strong, Solana have been super strong, Doggy has not been bad. I don't take it too seriously or know what to make of it. ADA has been very strong and is now relatively overperforming, where before during the bear market it was underperforming. So now it's pivoted to being a stronger candidate on the bull side. So these are big cap alts that are actually doing better than Bitcoin on the pullback, and Ethereum, particularly Ethereum, which is, so you take the top two out there. Long run, I expect Ethereum to do very well. We aren't recanting that, and we've shared Ethereum versus the euro in our recent live trading day. It's got an incredible target of 3,300 euros plus beyond into the 3,300s and beyond. And it's also got an overperformance license, so it wouldn't be a full close. That would be another example of where I do 50%. So this is just a pause in that journey, and holding those will do well. And obviously the slightly smaller cap alts have higher percentages in them. But the interesting fact is they've shown relative strength to the Bitcoin and Ethereum pullback. So this also shows it's not a market puke. It's not an absolute crap the bed pullback. It is just a technical respect of a prominent target being made, with a degree of overshoot brought about by the momentum and people getting involved, now requiring a winding up before taking on the next key level of the 47.5 range, which is another neckline on the very first head and shoulders, pre the bear market head and shoulders, that took Bitcoin from 64 down to 29. So these are really big structures. You actually had two head and shoulders warning you that the time was almost coming up. Two substantial reversal patterns. And the first one performed, and then the second one performed, calling the bottom of the bear, the second one. So it's really, really interesting technical scenery. You need to view the entire stage of where you are, and you made then that new head and shoulder. So it literally, I don't think there's ever been something like this in the history of Bitcoin. You actually have bookmarked a typical head and shoulder to the downside at 69. You got a warning head and shoulder at 64 that took you to 29 that performed. You got a marginally higher high to 69 where after you started to fail again, and you set up the second head and shoulder. You have those two necklines at 47.5 from the first one. 42.5 was deeper on the bigger one, which was the 69K, and that second head and shoulder gave you the low. And then the bookmarking is you also then got shoulder head 15 on the reversal. So you literally had a head and shoulder call the top, and you had a head and shoulder call the bottom. You bookmarked between two reversal patterns, and you made the target of the reversal infants bull market call on the inverted head and shoulder. And you've got to expect a reaction to that. And you have a clear run through the target, which is just enough to deliver you the 42.5. And you have that small island above the 42.5 of price behavior that started to go marginally higher, the second one, and then go very low vol. Look at the chart. I'll put out on Twitter while you are watching this video. For those of you that are battling to visualize all that I'm saying, I will tweet it out. But this is healthy. There will be rookies who went in too big, too strong, with leverage to the moon, and they will be blown out and decimated by that. Do not trade large leverage. Very conservative, and choose the moments when you use it, and be quicker to take off and have real reasons for why you take off with targets to avoid. And I, in part, executed. I didn't kill it. And recognize you will not kill it every time. Should have done a full closure on the leverage, gave back a lot of what I'd made on the leverage side to the upside. Investment pot is fine and does exactly what it does, and it is what it is. Forgive yourself if you didn't execute correctly. Do not if you've blown yourself up, if you're watching this and you've blown yourself up, or you've faced a major hit here, you are trading too big and you are lacking method. And where are your stops? Where are your sizing tools? And what were your reasons? And at what point do you take off? The biggest thing is knowing when you have leverage, when do I take off? And executing on that. And as I say, even after many years, the greed genie will take over your mind, and you'll be counting, oh, but if I let it go a little bit more, then I made 100 grand or 1 million or 10 million or, new car, new house, new ever. The market is not there to give you your new house, your 10 million trade, or your 5 million trade, or your 1 million trade, or your 100 grand trade, or your 10 grand trade, or your $1,000 trade. It's not there. It doesn't, there's no perception of that. It's going to do what price behavior typically does on balance of probabilities if read correctly most times. That's what it's going to do. And after running 40.5 and 42.5, you had a very short spell of the weekend. And you should have cut. You should have cut and sat on your profits. And then on the shorter time frame, there were clues as to why it was getting a bit soft, and that was the moment, and you were seeing it on Ethereum as well, and hence why they pull back. There's also been differences in performance on the pullback. So for example, XRP pulled back quite hard, quite ugly, and the bounce has been mediocre. So XRP slightly underperforming in franc the rest of the total 3 category. So Bitcoin dominance clearly is given up. Ethereum hasn't picked up that Bitcoin dominance. It also pulled back quite hard. The likes of Binance, ADA, AVAX, Doggy even, Solana have actually been better bounces. Cardano, one of the top in them, and as I've already highlighted, gone from underperforming in the bear market to recently now starting to get its goat together and being a dominant overperformer in the bull market. And you have to notice these relative shifts for allocation and how you allocate. So just thought I'd give you that update, and also keep an eye on gold and the bond markets and interest rates, because that will also determine when dollar strength might come back, and you could have a longer period of wind up for the spell between 39,000 to 42.5, 44,000, and getting through the 47.5. We can't tell you how long, especially this early after the slam down. So we're sitting here on Tuesday. The events happened for us by my time, Monday, early hours of the morning. And we wait for it to show us what to draw. Early indications, according to me, with the little that I have so far on balance of probabilities, say this is not a huge drama. I don't foresee you going back to 25k, for example, or making a new low or a double bottom at 15.5, or some people going 5k and 3k, and it just doesn't have that degree of momentum or follow through so far that I can see. I think it's just a bull market correction which will shake its head after a while, need some time to square up and for the volatility to taper down, and then it will wind up again at some levels. It might be a falling wedge, it could be an HVF, a symmetrical structure, it could be a flag, it could be, the world's still to see how we do that. If it grinds marginally down, making marginally lower lows, that's actually in some ways more bullish, but it'll hurt you if you're still holding leverage positions. So the key is to recognize one of the most important things in a bull market when you're utilizing leverage is not to try put leverage on for the entire bull market. Or if you intend to do that, then you must do 25% and 50% leverage, and you literally have your investment pot and you're adding no more than half again. And then you ignore everything that goes on and recognize, you can sit out a 50% pullback like that without blowing your whole pot. And also recognize you're going to be paying exchange fees every day, even on the down days. And the bull market might be a slow one, and you might make that extra money back and pay those exchange fees. But if it was a very slow one, could run a bit behind. I don't think it's going to be a very slow. I think at some point you will have a major parabola move. But right now, the world is not looking at Bitcoin. You look at Google searches and all of this stuff. It's still early doors, and people have heard this movie before. They've been burnt before. They're not coming back in a hurry. That's good to tell you that actually you're still early mid phase. Early, that infantile to mid phase. This bull market is still a teenager. You haven't even taken out the top. And don't forget, we did do a potential for 145 and the 3 fat Chinese ladies 888. I say that out of humor. You're not going to be exact, but as an upside potential target on that 47.5, you still have to make that 47.5. So all of that still holds, but that's a macro. You got to be up on the monthly and the weekly charts for that to happen. So wind up, make 47.5. I do feel that will be another key place, which you have to treat it like the 40.5 and the 42.5. Get out, expect a bit of a rest. Depending on how long we wind up. If we were to wind up for a very long time and set up a huge pattern, then you could smash through 47.5 and run and maybe even cross into the 50s before you get a rest back. If we are doing it a medium amount of time or a fairly quick one, I'd cut and run again at 47.5 on the run through that. So you could get a 48, a 49 number. You might even get a 50, but don't go too much beyond that. You will regularly get pullbacks until we're in parabola state, and the Google searches will show you that. That's when everyone in the retail monkey is chasing in, and you've already probably, I think that only starts to get seriously happening once you have crossed the previous highs of the legacy bull market. Then you're no longer infantile early teenager, you're teenager 20s 30s. You're in the peak of the bull market and you want to be long there, but you want to also start thinking, what are my levels for getting out? And we've just given you a level on that inverted head and shoulder at the 47.5 mark if we do what we expect to do. So it's not even finished drawn that. But you already saw we gave you an inverted head and shoulder before anyone else that suggested 40.5. When you traded down to 15.5, that's performed. So the next one can perform too, but you have to give it time to set up. And it's on a bigger time frame, and we've got to walk this thing through. So the progress of that to that target, I would certainly start saying it's no longer a young bull once you at 145 and the 3 fat Chinese ladies. I would say, you want to start slowly tapering out and locking in and just being investment and closing a large part of your upside in terms of leverage trades at the 145 level, assuming that occurs. So overall, our bull bias remains. We don't see returns to 25 and 15 or 3s or all the crazy numbers that some people are talking about. There's some guys with Elliott wave calls that are actually saying that 69 are the top and that all it goes is down from there, and that you've got you've done your 5 wave and now you have a 3 wave down on the macro since inception on these big charts. I'm seeing quite a bit of that being spoken about, typical Bob Prechter type analysis. Whilst he isn't necessarily wrong, I'm not poo-pooing that. I don't feel it myself personally, but there is a fundamental question. Will they really keep Bitcoin alive once they do the CBDCs? Who's going to want the CBDCs? And will you be able to trade out of your CBDC for Bitcoin? Because that's what everyone's going to do. So there could be a situation where, hold on, Bitcoin, you're making CBDCs look bad. You now need to be an artifact. But then you question, BlackRock and the ETF and getting all involved. Are they all part of a fake out? And then it'll become, no, this is not a credible asset anymore. We've superseded that now. And they sell everyone down the river, and Bitcoin, I wouldn't say get killed, but becomes a pet rock, a Tamagotchi. Just the diehards are left. I don't know. So you can't rule out those Bob Prechter type scenarios, which are going to say you're going to have a macro 3 level down and you're going to take out the 15.5 lows. It just doesn't look like it to me at this point, in terms of not with what we have so far on that pullback. Have a violent next leg sell-off that crashes down really deep and super strong and bid absence and related news to go with it, we'd have to review that. So I can only tell you how I see it right now as we see it. But I think this is just a healthy correction. And yeah, you should stand by and don't be oversized. It's just a warning. You get warnings. The markets tell you, don't be oversized. And if you are on leverage, take off regularly, and reducing size is power because it gives you the option to put back on. Being fully loaded and all in gives you absolutely no optionality. People think it's macho and it's bold. I'm all in. I put all my entire investment pot in. and I've gotten the maximum leverage I'm allowed, and I'm doubly long on it, buying the same stuff again. I'm carrying a bigger position with leverage, and I'm all in. I've got no more space for more. Well, God help you if you've got in at the wrong time, or you don't take off. If you don't take off at a localized high, and it's the harder thing to do because you're making money, you're selling into a high, you've got green P&Ls, and you're saying, that's enough for me. I'm taking down. These are my reasons. Key levels, targets, all of those things. Even when you know them, it's hard to do. And most people are trading without knowing them, and certainly don't trust the bald guy in white glasses a million miles away on a YouTube channel telling him that those levels, it's not enough conviction. They're making money. What do they care? Stay in, be long, make more. If it's made you money the last 3 days, imagine how much you're leaving on the table in the fourth day. Well, boom, things change. And they change on levels, and the levels are determined by the patterns in the footsteps in the sand, and that is technical analysis. Okay, thought I'd just leave that with you as a commentary and a stroke update. Remember, use the link below, book and become a member of our community, book a call, have a chat. You can find out more about what it is we do, building wealth in reset times, protecting that wealth, and at the same time, the abnormal financial macroeconomic environment, how to survive that is not like anything your financial advisor in a traditional realm will be giving you. Okay, till next time, thanks for watching and giving us a thumbs up and a like, and we'll look to give you more updates in due course. Bye for now.